I'm John Hanna for CityTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good morning, sir.
Well, good morning, John.
How are you?
Well, I'm doing well. The question would be, how are you and other fellow New Yorkers in the East Shore of the United States? Sounds like you survived um, Irene.
Yeah. It's a good thing that there wasn't a lot of loss of life and damages out there, but the people who lost their lives will be our heartfelt, condolences. It could have been worse. That's the bottom line for that thing.
Yeah.
Everybody, I think, was prepared. Everybody's hunkered down, and the other thing is that the Hurricane Irene wasn't that much of a strong hurricane. So again, it spared a lot of the East Coast communities.
Well, it was quite a week, for the markets, but also for the East Coast. I mean, it got shook up. The markets were shook up. The East Coast was shook up. I mean, you had an earthquake and the
Yes.
hurricane all in one week, and I think that's the first on record for the eastern coast. You guys get rattled, and so do the markets. For the first week since the end of July, the volatility was to the upside. The markets, but the Dow, it topped the 11,000 mark as the industrials continued to be the year's most resilient domestic equity index. The Nasdaq saw the best week since the beginning of July, and while the small cap Russell, it was the hardest hit during the recent slump, had the biggest gains. And so the S&P is now up just over 5% from the August 8th lows. And so confidence looks like is coming back in the markets. It's amazing because you had the earthquake and the market really kind of almost rallied. I don't know if it was just happy that members of Congress and the White House were evacuated and they couldn't actually do anything. And Treasury yields were up in the prior week, historic lows. And after nearing $1,900 an ounce, gold sold off sharply during the week, giving up nearly $150 an ounce at one point before recovering a bit on Friday. At the end of last week, John, the Dow Jones finished down negative 2.5% for the year. Nasdaq off 6.5%, and roughly the S&P the same amount. But the Russell 2000, is taking it on the chin and much harder, and it's down 11.7% as of Friday. As we speak, on August the 29th, Monday at 12:30 p.m. Eastern Time, the Dow's up approximately 200 points, Nasdaq up 60-some points, and the S&P up 24 points. So we're seeing about a 1.5–2% bump in the markets after Hurricane Irene. Not as big of a deal as they thought, as we've talked about. But so the market seemed a little more confidence. Looks like it's put in a bottom for now. Excuse me. And only time will tell if, based on the economy and how things look. But as we look back at last week's headlines, Federal Reserve Chairman Ben Bernanke said fiscal policy measures, not monetary policy, are needed at this point and are not in the Fed's jobs description. So he kind of pushed responsibility for stimulating the economic growth in the hands of Congress and the Obama administration. And so we'll know more about it come September. In fact, it's going to extend 2 days for the meeting in September to allow further discussion about the Fed's options, whether they have any more stimulus or not. Second quarter growth was kind of the big news, also slower than previously estimated. The Bureau of Economic Analysis said that the GDP, initially thought to be 1.3, was actually 1%. New home sales continued to languish in July, falling 0.7% from the month before. However, the Commerce Department said that sales were up almost 7% from the previous July, and they were at their lowest level since February. So new orders for durable goods leaped 4% in July, according to the Commerce Department. We're up 9.4% from last July. So the economic news was kind of mixed. Real estate continues to be hampered. GDP lower than initially thought, but we set a good leap in durable goods. So kind of mixed news on the economy. We turn our eyes to Japan. They're struggling to rebuild their economy. Moody's downgraded Japan's credit rating from an AA3 to a AA2. The rating agency said it foresees difficulty for the country improving its debt to GDP ratio, which the IMF estimates is a 234% debt to GDP. Now, if you compare the U.S., it's roughly at 99%, and Greece is 139%. So Japan really struggling with a heavy loaded debt. It probably won't improve for the foreseeable future. We also have the Congressional Budget Office reduced slightly its estimate of the current fiscal year's budget deficit to $1.3 trillion, but forecast unemployment of 8% or more, which could continue through 2014. So not a very good outlook on jobs, job conditions. Gold prices, as I mentioned earlier, began falling on Monday, and that wasn't helped by the CME Group's decision to raise margin requirements on gold contracts for the second time in a month, and this is an effort to try to curb speculation in the gold markets. As we look ahead this week, John, investors will try to gauge the economic impact of Hurricane Irene, and Friday's unemployment data, as always, will be watched closely.
Any other words about gold?
Well, I think bottom line is gold long term, I believe, will be in a continued uptrend. If you look at the charts from a satellite view of gold and the markets, the gold has just within the last 2 years overtaken the S&P after many years of underperforming. So we could still be in a long-term trend for gold, but I wouldn't chase it. I would buy on weakness and think long-term.
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CityTV.net in New York.